All right, guys, welcome back. We do know that in a crypto and Bitcoin bull run that a rising tide or a rising Bitcoin tide rises all ships and everything will do well. But we aren't here just to do well. We're actually here to make life-changing gains. So in order to make sure that we do that, we need to be looking at the most bleeding edge technology and the trends that are going to pump the absolute hardest in this upcoming bull run. So today we're going to talk about one trend, one narrative that is clearly defining the path. We've talked about it before, but today is more evident than ever. We're going to talk about a new technology standard that is pretty interesting. And we're going to go into, well, just wait and see. All right, guys, if you guys are excited to learn about this new hot narrative that is absolutely critical that you pay attention to, and I will teach you, if you don't know, I've been at Satoshi Roundtable, which is a pretty exclusive event over the past 5 days, and I think that the network that I've built there and some of the projects that I've met there, one particular does fit into this narrative quite well. And so I'm excited to bring those to you guys as time goes on. Because if you're excited for everything going on, make sure you do me a favor and destroy that like button. Subscribe to the channel if you're not already. My name is Chasse, guys. Without further ado, let's get into it. And first thing we're going to do is talk about Bitcoin. And you can see, actually, nice. We have a nice little green candle here. It was red when I started preparing for the show, but relatively moving sideways, right? Stablecoin, pretty boring. As far as inflows and outflows, we've got on Friday, net positive 80 million outflows. And same thing with yesterday. The grayscale is slowing down. We have the overhang now of the other lawsuits as well, but it's not really a big deal. So right now, Blackrock and Fidelity hold 134,358,000 Bitcoin worth over $5.7 billion. This is just going to continue to skyrocket, which, again, like I say, day after day after day, is inevitable proof that we are coming into the bull run of a lifetime. Now, I found this very, very interesting. This just shows you the trend, the attention span over time. So let's zoom in on this a little bit. Back up here. So you can see this is from the beginning of the year. January is ETH, Bitcoin. Oh, whoever that was that came in here. And then we got Bitcoin coming. Oh, ETF, ETH again. No, it wasn't ETF yet. Let's play a little bit faster here. Okay, there we go. Now that's Bitcoin ETF. And we see Solana is coming back in here. Solana. Oh, earlier you saw Pepe. Yep. Oh, there was Friendtech. Gone. Solana. And you can just see how the everything down here, just the attention, the attention goes and comes. And so it's really important that we pay attention to what are people paying attention to right now. And we've talked about this before on the show. And Dynamo Patrick is a great account to follow, especially for airdrops, guys. He says that restaking, modular chains, AI, DPIN, real-world assets, BRC20s, VR, AR, gaming, and payments will be popular. Today, we're going to talk a lot about restaking. So right now, there's 1.583 million ETH that have been added to Eigenlayer, which makes Eigenlayer the 6th largest ETH depositor, and like this, very, very fast. I expect this to skyrocket probably to maybe number one, right? So Eigenlayer narratives are going to be extremely popular. We've been talking about this before, right? Restake we talked about before. I'm still bullish on that as well. And another one here is Puffer. Now, the reason I bring up Puffer is not to buy it because the market cap is way too high, but you can go over here and join the quest. There's an upcoming airdrop if you are interested in doing that. So Puffer Finance is that's $135 million in deposits in 24 hours as liquid restaking sector heats up. The protocol's soaring deposit rank it as the 5th largest liquid restaking provider behind EtherFi, KelpDAO, Renzo, and EigenPi. Puffer offers DeFi users another way to restake through their Ether through Eigenlayer, the leading restaking protocol, while potentially earning extra rewards in the process. The project's backers include Ethereum Foundation's researcher Justin Drake and Eigenlayer's founder Siram Kanan. Vector is another one that I want to talk to you guys about. Just really not because I think that I'm very bullish on it, but to show you that there's a lot of competition heating up here. And so today we're not really going to call out any alpha altcoins that you must go buy right now or anything that I'm playing. But I want to just talk about this narrative a bit because it's such a critical aspect to look at of who will be the most clever when it comes down to what you can do with Eigenlayer. Remember, it's a restaking narrative. It allows you to take your staked ETH, restake it, and then that restaked ETH acts as security for other protocols. And it'll be a game of who finds the highest yield to allow people who are restaking to earn the most. And ultimately, those are the protocols that will win. So there's a lot of research that we're going to have to do to try to find out where will be the best and the best plays coming up. So you can see that, so reading through the docs, it's easy to get lost in technical terms. So I'm going to keep this as high level as possible. Think as VEC, this is going back here to Vector Reserve. Think as VEC as a diversified basket of restaking strategies automated for you and accessible through one platform. The choices of yield exploded with the release of Eigenlayer. VEC combines multiple strategies in the form of VETH, like a mutual fund of restaking strategies. You buy one asset, VETH. The ETH backing is used to earn yield from several sources, returning a blended rate. Where does the yield come from? LSTs and LRT yields, so liquid staking and liquid restaking, trading fees and emissions from LP positions, like Uniswap and things like that, and superfluid staking once it's enabled by Eigenlayer. So real revenue real revenue is the future of VEC. The first product generating real revenue is VETH, but it won't be the last. More to come, and I can attest to that. I know several more. We've invested in some, and also met one at Satoshi Roundtable as well. That when the time is right, guys, I will tell you about it. So I'm not buying any of these tokens. It's a $42 million market cap already. Not bad for a new token. But this is also an interesting new protocol here, guys, called Pandora. Pandora is a collection of 10,000 avatars or replicants bound to the first token built on ERC-404, an experimental token standard enabling persistent liquidity and semi-fungibility for Ethereum NFTs. Our website is currently receiving updates. So it's not Pandora, but it's this new token standard 404 that's interesting. Now, this is confusing as hell, and I'm gonna let you guys listen to it.
Biggest technical expert, but I think it's I was trying to explain it in a very simple way. I don't think it's that hard to understand. First of all, I was having discussions with people who were telling me like, hey, this has been done before. It's not actually that novel. You know, you have like pseudo swap. You can do like ERC20 wrappers for NFTs. But basically what these guys did is very simple. They tied together two token standards. ERC20, so like normal tokens that we trade day in and day out, and ERC720, which is like the NFT standard that is being used now. It's a bit different, I think, from SudoSwap and like having an ERC20 wrapper, because these are essentially tied together. So whatever action you do on chain, it affects the other. So technically you could say you have two of each. So you have both the tokens and the NFTs. But for example, if you sell a token, it will automatically burn your NFT like within the transaction. If you transfer the token to another address, it will randomize the NFT. So the traits always get randomized on a transfer. If you sell the NFT on OpenSea or wherever, it will also transfer the token. So they always go together. But this is the biggest distinction. If you transfer your NFT or you sell the NFT, it does keep its traits. So let's say you have some rare NFTs from the ones that you minted. You can just transfer them out to a separate wallet, and you will keep the rarities. Otherwise, everything keeps getting reshuffled. And the new, with every transaction and the NFT is burned and then it's reminted. It's reminted with a higher serial number, but the rarity could still be rare, quote unquote, based on what we know so far. So basically, that's all that it is. But what it does is, if you think about it, you can think about it as like a 10,000 NFT collection that also automatically have tokens attached, which you can easily add liquidity to on Uniswap. And the price of the token on Uniswap is essentially the floor price of the NFT collection, right? So you can anytime. I'm not a big NFT trader, so I never really cared about, let's say someone shills me pudgy penguins, I would just go and like sweep the floor. I really don't care about rarities. So for someone like me, this would be really useful because I would just buy like penguin tokens or whatever and don't care about the rarity, right? So you can always dump on DEX at like the floor price or buy at floor price.
So guys, that's what it is. It, to me, it still is a little bit confusing. But the point is that this space evolves at such a rapid pace that we have to keep up with the evolving narratives, and that's how you make the most money in the bull run. And it's unbelievable that a project like this, I just found out about today, already has an FDV of $85 million. Definitely do not suggest going out and buying this thing, but it's mind-boggling, and to see how people will end up using this, it opens up in a whole new world of possibilities. And guys, as we move forward here, I must continue to mention here that some pretty good points were brought up about Dymension, because by the time this is posted, Dymension might be trading, and so Nowhere says, and I don't see a reason why Dymension should be traded over $3 ever. Sorry to say, at least with Celestia, there's a decent narrative that doesn't hinge on adoption, something like roll-ups. Data availability is already a crucial piece of the pie, even if FDV is a tad steep. And he says you can't just claim that every airdrop token will mimic TIA price action from the launch when the FDV is already going to be much higher than Celestia's initial FDV. There also weren't a million airdrop fanatics foaming at the mouth for new tokens. No one was bullish on TIA. And that's right, TIA was the kind of trendsetter in this, and this cannot continue to happen over and over and over again. It is a very good point. I am not buying Dymension when it launches. Again, I'm here to make life-changing gains, not to come in here and try to buy multi-billion-dollar valuation projects. I did say, though, in the video yesterday that there is opportunity here, and I do think it's important to call out when someone makes a great point that maybe it doesn't. We have to wait and see. The interesting thing about Celestia was remember, I don't know if you guys have been here for a while, remember when we looked at Celestia's website and the ecosystem, there was so many huge projects building on Celestia that I recognized that were going to be launching at multi-billions of dollars of valuation. And I don't see that on Dymension's website. And so we can't expect there to be that many massive airdrops. There might be, but at this point, I just don't know. And so the price action, we're going to wait to see. The point is, don't FOMO into anything when it launches ever. Let's just wait and see what happens with price action. Let's wait to see what happens in announcements. And let's wait for some really, really good buying opportunities. Like, for example, Whales Markets, when I told you guys at $7 million, is now 7.5x up from when I told you guys, which is unbelievable in like 10, 11 days. So again, congratulations, guys. And Loot, Loot's taking a little bit of a pullback right now, but it did. I think the whole market has pulled back just a little bit right now, but it did pop up quite a bit, and we'll see. I do think that if Whales continues to pull up, because even Whales just took a little bit of a pullback right now. So if Whales continues to go up, then Loot will as well. We'll see. Another thing too, guys, is that Solana went down today, so and is beginning a lot of FUD. Now, one of the things that I've been talking to you guys about before, and it was my criticism on it last year, and it's very interesting to see it happen right now. We're gonna have to wait for the postmortem to find out what happened, but again, this is going to be really concerning for people who are looking to build DeFi applications, perpetual dexes and things like that rely on the blockchain to run, that have billions of dollars of TVL and billions of dollars of potential liquidations or things that need 100% uptime. So again, I'll bring this to you guys tomorrow as we learn more. But for now, it's not good for Solana. Solana will be good for cheap and fast things. Yeah, it's very unfortunate what happened. But again, we don't know until we hear the post-mortem. So guys, and the things that I learned at Satoshi Roundtable, the people I met, let those relationships develop. Today was the last morning of it, and I'm excited to bring to you guys some of the things that I've been learning, because I met some incredible projects there, and I know that they are excited to share what they're doing with you guys, my community. So make sure you're subscribed and hit the bell notification to get the most up-to-date current things, because some of them will be like whitelist opportunities where there will only be so many available. And if you guys aren't in the alpha group on Telegram, make sure that you do that. The instructions are in the description below. And guys, that's gonna wrap it up. I will catch you guys on the video tomorrow. Bye-bye.